Welcome back to Yahoo Finance Live. We're seeing Bitcoin taking a slight breather today, but continuing that march to 50,000 after hitting a new record in the session yesterday on the announcement Tesla is investing $1.5 billion in Bitcoin. Our next guest has more than doubled this price target for Bitcoin to $100,000 and says corporate crypto buyers will be a key catalyst for demand. Let's bring in David Grider. He is Fundstrat's lead digital asset strategist. And David, as soon as we got that announcement from Tesla yesterday, automatically it became speculation about who was jumping in next. How much of that investment coming in from Elon Musk do you think really changes the game for, or gives cover really to a lot of these companies that were already thinking about investing in digital assets?
Yeah, first, thanks for having me. One of our theses that we put out when we did our 2020 Outlook call 2 weeks ago was that, we thought for fundamental reasons, actually, you could see a number of corporate buyers taking positions in, not just Bitcoin, but crypto more generally. And, I think there's been a lot of talk in the media and, with some maybe potential critics about this being, perhaps something that's a risky thing to do with corporate balance sheets or something that's, purely speculatively motivated for a lot of these companies. But, one of the reasons that we thought it's really important to think about this differently is we think about these crypto networks and the reasons corporates would want to own them is there's a lot of utility being provided by these networks, and it can be very disruptive to some corporate business models, which we'll talk about in a bit. But there's real reasons that you'd want to own some of these crypto assets to really also, as a disruption hedge or as a complementary way to, increase revenue to your business.
Yeah, when we talk about the risk reward, I mean, it's hard to maybe look back to 2017, the last time we saw the big bust, or right in kind of the aftermath of that run up, and say that could happen again. But I don't want to rule it out. But when you weigh kind of this move from Tesla and just the money flowing in from institutional investors, talk to me about maybe how the risks are maybe diminished when you look at kind of a fundamental analysis of where the market's at now.
That's how it's used. I think people, there's certainly a narrative around, the inflation hedge and the digital gold. But, I think more important even than that, eventually is how the technology can really be impactful to businesses and what it can do to be transformative. So, if we just take a couple examples and explain why, this transition from platform or from companies to platforms to networks is important. What we're seeing is it's like with crypto networks, right? These are a new form of organizational model, right? And it's kind of like the internet. As more businesses and users join these things, the value of them, increases, right? And the utility rises, and people join because there is, really disruptive utility in this technology. So if we take an example like Bitcoin, and just give a tangible comparison to something like PayPal. Obviously, PayPal has adopted the use of crypto and Bitcoin. But Bitcoin, the payments are really 3 times larger, growing 12 times faster, and 99% cheaper. And, that's something that's disruptive. And I think over the long term, if you think about how do you, as a business, competing against something like that as an alternative, how do you hedge your business and how do you kind of stay relevant? Well, one, you can adopt it. But it's not the same dynamic like with Facebook and Instagram before, where, previously if you had the ability to buy, Instagram out, right, when they were a transformative competitor to Facebook, you didn't have that anymore with these networks. So you have to buy a piece of the network, and you have to, adopt it in your use. And if its value offsets your revenue loss in the future at some point, that's something that could happen.
David, you mentioned that you expect this to really go beyond Bitcoin, obviously other digital assets that could get a big lift on the back of this. What particularly are you watching on that front?
Yeah, so I think, as Bitcoin rises, given the size of the network, you're going to see obviously capital flows within the crypto economy move down to other assets. And, but I think there's fundamental reasons too, because there's a lot of use cases beyond Bitcoin. And payments. I mean, if you think about something like Ethereum, which we've been on here talking about before, we think about it like potential new way of cloud computing, right? So it could be a potential cloud network platform. You could see some of these DeFi network platforms, really kind of disrupting traditional fintech or, finance business models. And, I think something may be complementary. And if you think about Bitcoin and some of the mineable cryptocurrencies, and this is coming back to Tesla, is the energy space and the way that Bitcoin and mineable cryptocurrencies with their ability to really convert energy through this mining. And I can talk about the details for newer folks, but you can convert energy in almost arbitrage, again, across different types of energy, across different geographic locations. And that's something really interesting that we can talk about.
Yeah, I want to have you back to kind of dig into the DeFi opportunities there too, because that's quickly developing. But one of my favorite stories in the Bitcoin space was a miner using the heat from their rig to grow tomatoes in a greenhouse. We've seen some very interesting use cases out there. But David Greider, Fundstrat lead digital asset strategist, appreciate you coming back on, man. Be well.